So in this session, we want to think a little bit about how, so it's a fairly open-ended session. It's, oh, we don't have the title up yet, but it's basically about data and financial mind. And what I would like to do in this session is to think a little bit more about the kind of society part of the conference. So in particular, I would like to talk about how fintech has been sort of shaping the way we relate to finance and also kind of more society-related downsides and risks of fintech. And one example of kind of downsides and risks or tools that can be used sort of for good and for bad in society is, for example, machine learning. Machine learning can be a very powerful tool, and it's actually been brought up a little bit in the last panel, if sort of applied the right way, but it can also create potentially more divides and biases within our society. And so first we're going to hear from Professor Radev, who is actually an expert in natural language processing, and he's going to talk to us about developments in this area. So Dragomir Radev, I'm going to introduce you in a second, is the A. Bartlett Giamatti Professor of Computer Science at Yale University. His research interests are in natural language processing, information retrieval, machine learning, and artificial intelligence. He's the author and co-author of nearly 200 publications and the holder of 3 patents. In recognitions of his sustained contributions to natural language processing and computational linguistics, he was honored with the rank of Fellow by the Association for Computing Machinery and Michigan's Faculty Recognition Award. So thank you very much.
So thank you for sticking to near the end of today. I realized that my talk probably fit better in the previous session about technology. And I realized that the speakers there, specifically Julien and Paul, talked up artificial intelligence a little bit for me. So I will now go through the details of artificial intelligence and show you how it is related to finance. So you have seen probably the most recent successes in AI. Computer beat the world champion in Go, beat the world champions in the Jeopardy trivia contest. There's a lot of work recently on autonomous agents that play soccer with actual robots and real balls and real scores. And there's a lot of work in artificial intelligence these days in companies such as Uber, NVIDIA, Tesla on autonomous cars. So in terms of finance and business, AI is considered to be, along with big data, one of the driving engines of this new revolution. So here's some cover pages of The Economist that says that big data is the world's most valuable resource of the 21st century. Harvard Business Review front page story by Bryn Wilson on the business of artificial intelligence. And then some numbers here. Look at this, the digital universe. The amount of data went to as high as 200 zettabytes of data per annum. So this is 10 to the 21st power with another 200 in front of it. That's enormous. And then you also have this very interesting statistic here from The Economist and from Bloomberg that shows you that 200 companies use the term artificial intelligence in their earnings reports. And this is up from just a few, only 4 years ago. So this is a big revolution coming up. So it's a very interesting area to work in. It's very important for computer scientists like me, but also for people in the business industry. So AI is about things like automatic learning, decision-making. It has had a lot of successes in areas such as speech processing, robotics, machine translation, and so on. In the last few years, in particular since about 2012, there has been a full-scale revolution using deep learning or neural networks at a large scale. So those have been made possible because of the large quantities of data that can be used to train new machine learning systems. And also by the advent of very powerful parallel hardware, for example, GPUs that are manufactured by companies like NVIDIA. So there's also a lot of large and optimized code that developers at companies and at universities can play with so they don't have to reinvent the wheel from scratch. Okay, so now I'm going to go through a few sections of my talk. I only have about 20 minutes, so I will make sure that I cover as much background as possible. I know that I'm not going to be able to finish all my slides, but I will share my presentation with those of you who want to look at it. I have also 7 pages of references at the end that you can look for more details. Okay, so this is a nice picture. It shows you the most recent creation by NVIDIA. This is one of the most successful chip makers. This is the kind of chip that will run your autonomous car in the next few years. And as you can see here, it has 300 trillion operations per second. This is the fastest mass production chip that you can find these days. Okay, so AI is a very important research area. It's considered to be part of computer science, and it has multiple sub-areas. For example, machine learning, computer vision, natural language processing, graph mining, robotics, and so on. Now, one of the examples that I have here is an AI system dealing with computer vision. So imagine that you have an autonomous car, and you want to be able to parse this scene. Obviously, you need to recognize where the other cars are, where the pedestrians are, so that you can make an appropriate decision, for example, whether to steer left or right, or whether to press the brakes and save somebody's life. So a related task in computer vision is object segmentation. So you not only have to find the locations of those objects, but to recognize their boundaries and recognize that this pedestrian image starts at that particular pixel in your map. And here's a funny example of computer vision that you may have seen somewhere else. So a lot of machine learning research is about parsing images. Some of them can be very difficult. In fact, it's very hard to tell a muffin from a chihuahua. Okay, so the second thing, machine learning. So very quickly, again, 2-minute introduction. So machine learning is a way for systems to adapt to new environments. So instead of hard coding rules that say, if this happens, do that, you're going to learn from the environment. This is typically done by observing histories of events. For example, if you want to train the best Go playing system in the world, you let it play against itself, recognize cases where it makes mistakes, and tries to adapt to those mistakes. There are many different kinds of machine learning. The most interesting one happens to be supervised learning or classification. That's where you have some labeled data, inputs and outputs. For example, it could be credit histories and then credit-made decisions. So based on a certain type of input, you want to make a certain decision. Then you train a classifier, whether it's a support vector machine, k-nearest neighbors, or decision tree, or in the last few years, a deep neural network to be able to learn to make this kind of decisions in the future. Okay, so what is classification? This is one of the fundamental tasks in machine learning. You have objects that you want to classify into multiple classes. For example, is this email message spam? In which case you should go to the spam filter, or not spam when it should be delivered to your user's inbox. Is there an obstacle in front of the autonomous car, or is there no obstacle in front of the autonomous car? Is this a report about the company positive or negative? Is this person or this company high, medium, or low credit risk? So in all of those cases, you have classification decisions. And I claim that the majority of the decisions that are made in the financial world, in the AI world, are all classification decisions. So very simple math here. So the way to classify things in a large dimensional space is to create something called the weight vector, which tells you how important each of the features is, and then have a feature vector that represents the object that you want to classify. And then when you compute the dot product of those two vectors, this is this formula here, you get a number. If this number is above a certain value, you classify this object one way. If it's below this number, you classify it in a different way. So this is a very nice picture that shows you a simple decision boundary, a linear decision boundary in machine learning. You have a straight line here with a normal vector here, W, which tells you the slope of the line. And then you have a new object represented with this X vector here. You look at the angle between X and W, which can be computed from the dot product. And then you can decide whether this object belongs to the circle class or perhaps to the X class. So one of the important things in machine learning is how to learn the parameters, how to learn the weights. And this is usually done by techniques such as gradient descent or perceptron training, which you can learn in a machine learning class. But the basic idea is that you have a set of weights. Here, you move the set of weights, the vector that represents the set of weights, in the direction of the gradient of the function that you're trying to optimize. And this function, to be a little bit more technical, is the loss on the training day. OK, so another task in machine learning, in addition to classification, is clustering. That's where you don't have labeled training data. Clustering is very important, and very often it is solved by using a dimensionality reduction technique such as singular value decomposition. So in singular value decomposition, you take the matrix that represents all of your data points, and then you try to find a lower dimensional representation. So here's an example of a lower dimensional representation in 3 dimensions of companies and how their returns correlate over time. So you can use this representation to find clusters of data points that operate the same way. Here's another example. This is from a recent paper by JP Morgan, where they look at tradable risk premia indices and how they cluster together, again, using dimensionality reduction. Okay, now I'm going to talk about natural language processing for about 3 minutes. So natural language processing is an entire industry. Facebook, Grammarly, IBM, Google all do natural language processing. So very simply, you have some sentence, you build the structure that represents the sentence, then you perform some semantic analysis that combines information that you gathered from the sentence with information about the world. Those two things together, combined with some inference, tell you what has really happened. This is more of an old-fashioned approach to natural language processing. I think in the last few years, starting approximately 2013, which is only 4 years ago, people switched to a completely different representation for natural language processing. And this is something called distributed vector representations or vector embeddings. So here's an example that I give to my students. If you look at those 4 sentences, even if you had no idea what an acerola is, you can figure out that this is some sort of a fruit. So the semantics, the meaning of the word acerola can be encoded as a dictionary definition. This is a South American fruit. Or it can be encoded in a distributed way by looking at the words that appear near that word. So this approach works for any word. And the idea is that if you have 2 words that are synonyms, they will appear in similar contexts. If 2 words have the same spelling but different meanings, the 2 meanings are going to have very different contexts. So this is how you can do, for example, word sense disambiguation and clustering and better machine translation. So one of the most interesting results in the last few years in the field of deep learning is something called word embeddings or word vectors. So this is the basic idea. You have a vector representation for the word king, a vector representation for the word man. If you take the vector difference of those 2 vectors, you're going to get some sort of a gender vector transformation that then if you apply it to the vector for woman, you're going to get the vector for queen. So geometrically, this is represented like this. You have king plus feminine goes to queen, queen plus plural goes to queens, man plus royalty, let's say, goes to king, and so on. So this was the method introduced by Tomáš Mikolov, who was a PhD student at the Brno Institute of Technology in the Czech Republic 4 years ago. This is one of the most cited papers in the field of natural language processing these days. Okay, next topic. So deep learning is now a way, yeah, we're doing a summary of like three quarters of material for class. So we're going to talk about the perceptron. So the perceptron is a mathematical model that is supposed to represent some ideas that are used also in neurons in the human and animal brain. So the very simple idea here is that you have inputs, then they get combined using a nonlinear function, and then you produce an output that goes through this axon to another layer of neural cells. So this, again, is only an approximation of how the human brain works. Nobody really knows how the human brain works, but this is good enough for engineering purposes to get things done. Okay, so here's a nice schematic of a perceptron. So you can think of it this way. You have a bunch of inputs, for example, the words in a financial document, that's an SEC filing, and then you combine them using a dot product, so the X vector multiplied with the W vector, and then you combine them here into a new value, which is 1 if the dot product is above a certain predefined bias, and 0 or minus 1 otherwise. In realistic neural networks, you also have a nonlinearity attached on it, so that the whole thing doesn't turn into just a simple matrix multiplication. So deep learning is not a really tricky thing to describe. It's just a neural network with multiple layers. So you have something like this. The input is here, the output is there. That's what you train on. However, you also have a certain number of hidden layers, which can be trained automatically using a method called backpropagation. So at the end of the day, you're going to learn the importance of each of those features and how to combine those features into a classifier. And the classifier is going to produce a value here at the output layer. Okay, so now the nonlinearities. So mathematically speaking, if you just have a bunch of layers, which all can be represented with matrices, the output will be just the product of all the matrices. And this is essentially can be replaced by a single matrix. So you're not going to do anything, you're not going to gain anything by having so many layers. However, if you have a nonlinearity attached at every output node, for example, a sigmoid, or hyperbolic tangent, then the whole thing changes completely. People have shown mathematically and practically that a neural network that involves nonlinearities outperforms everything else. So here's an example of the output of a deep neural network. So this is a paper by Andrew Ng and Hong-Lak Lee at Stanford University from around the time when deep learning became a big thing. So they were first successful in getting good results on computer vision problems. So for example, you have low-level features, for example, eyebrows, lips, perhaps teeth, ears, which then get combined into faces. And this is how you can recognize that a certain image is an image of a face. Another image type would be car, another one would be elephant, and so on. Okay, so why deep learning has become so important? Well, for a variety of reasons. First, that it gets amazing results. So just in the fields of speech recognition and computer vision, people have achieved 30+ percentage points improvement on the best accuracy before that. And in the last few years, again, starting approximately 2013, early 2014, natural language has also caved to deep learning, and people are getting amazing results on parsing, part of speech tagging, semantic labeling, and so on. So all the big companies that you can imagine, including the obvious ones such as Google, Facebook, but also a lot of companies in other countries, for example, Baidu and Alibaba in China, invest billions of dollars in research and development in artificial intelligence. And what's interesting is that trading companies, companies that sell things like Amazon, Uber, Walmart, also spend a lot of effort on deep learning. Okay, so one thing that you want to keep in mind is that deep learning is not really a new thing. The mathematics behind neural networks was invented probably 30, 40 years ago, and it's only now because of the large amounts of data, fast computers, that you can get real results. So here's an example of an image classification system that exists currently on the web. It's called Clarify. You can give it any image, and then it will label it with a variety of labels. For example, it will tell you that this is a city, skyscraper, it has buildings, it's a monochrome image, and so on. This is the kind of things that you can do with deep learning. So here's another example of word embedding, something that you can apply directly, for example, to understanding the semantics or the meaning of news articles. So using those vectors that I mentioned earlier, you can figure out that there's a transformation that takes, for example, an adjective like dark and converts it into the comparative form darker. And the same transformation takes soft and converts it into softer, short to shorter. A different transformation takes the comparative form, turns it into the so-called superlative form. Here's another interesting example from Richard Socher, who was one of the pioneers. He finished his PhD at Stanford 2 years ago. He's now the director of MetaMind, which was recently bought for like $40 million by Salesforce. So in his thesis, he came up with those examples. You have, again, the representation of a company, and then the representation of the CEO of the company. And there is a single transformation that will take any company name and transform it into the name of the CEO. So an interesting thing is that you can also do the same thing with multilingual text. So you can learn, for example, representations of words in English, in French, in Japanese, and combine information from multiple languages. Okay, so there are some other types of networks that are particularly relevant to speech and language processing as opposed to computer vision. Computer vision is mostly based on something called convolutional neural networks. In text and sequences, you have to use something called the recurrent neural network. So very simply what this is that you have a multi-layer perceptron for each word, and then the hidden layers of those are connected. And then at the end of this pipeline, you can produce a new classifier that tells you, for example, is this sentence positive or negative? So there's a lot of applications of recurrent neural networks and variants of those to pretty much anything in NLP: handwriting generation, language identification, paraphrasing, and so on. There are a lot of libraries that people use. Theano was discontinued recently, but TensorFlow, PyTorch, and some of the others are still very important. So for parsing sentiment and other natural language text, you can also use a recursive neural network. That's where you have, let's say, this phrase here that tells you that the vector for the word good is positive, but the vector for not very good is negative by appropriately combining the embeddings of the words in the middle. So you can do this, for example, to figure out the sentiment of an entire sentence. So the label at the top is the sentiment for the entire sentence, which can be combined from the sentiments of the words in the middle. You can also do semantic parsing, for example, converting sentences to SQL or SQL queries, understanding the meaning of sentences, and so on. And then a most interesting application of this technique, sequence to sequence, is in machine translation. So those are some of the results from the recently deployed machine translation system by Google, where they were able to get very close performance. So the green line is very close to human performance for many different pairs of languages, whereas the old Google Translate system shown in blue used to lag significantly behind human performance. Okay, so some applications of AI in natural language processing in finance. For example, you can compute sentiment analysis. You can find high-risk, low-risk words. So this is work done by Li Gao at Carnegie Mellon University. You can extract named entities. For example, recognize the names of companies, the names of events that happen to those companies, the names of people involved with those events, the sentiment of those events, and so on. And this is an example of a sentiment slide. So here's some applications of NLP and AI to finance. For example, in algorithmic trading, automatic credit scoring, tracking anomalous behavior. For example, they can listen in on traders and figure out if there is some sort of insider trading going on just based on the way they speak on the phone. Real-time risk exposure tracking, identifying unusual transactions, anomaly detection, insurance claim management, and so on. So there's more applications to finance. I have 4 slides of those. I don't have that much time, but you can see that you can use them pretty much in anything that you want. So just for example, predicting volatility, identifying illegal trades, trade execution, improving the quality of analyst reports, and risk management, peer-to-peer lending, and so on. So here's another interesting example of an application to finance. So a company used drones to monitor the oil levels in tanks, just to figure out what is the supply chain situation in oil. Okay, so this is totally amazing stuff. Okay, so there's a lot of code available online. If you're interested in data sets, you can get either from vendors or from free sources information about price-earnings ratio, sales volumes, transactional data, also textual data, for example, SEC filings like 8Ks and so on, press releases, general types of news. Quando is a website that has a lot of free data sets and also some paid data sets. For example, it has information about stock prices historically. So this is for people who don't already work at large trading companies where they already have this kind of information. From other sources, you have Chicago Mercantile Exchange futures data and many other data sets. So even the Yale Department of Economics has an entire page on Quando where they share a lot of useful information. University of Michigan, futures, and so on. Okay, so code libraries, a lot of code libraries are available for people who want to start trading, risk management from scratch using Python usually, but also some other languages such as Java, but mostly Python. A lot of NLP libraries. Okay, so I'm going to conclude with a few slides on challenges. So here's some of the challenges. Here's one. Take a second to look at it. So natural language is very ambiguous. So if you are not sure that you really want to eat the customers, you have to be very careful. Here's another example of something called adversarial examples. So people found a really good system that has 99% accuracy on recognizing different signs on the roads. And then they added just some random things like little tape marks here, and that completely confused the system. Even though for a human being, those are still stop signs. The computers thought that they were completely different objects. Okay, so here's something that happened, I think, 2 days ago. Somebody wrote a funny Onion-style story about Google buying Apple, which if you read the whole thing, you realize it's a hoax. However, the trading companies that use automatic news recognition didn't know that, and the stock of Apple went up until they realized that this is a hoax. So fake news is a big problem. And here's another one. So Volvo trained cars to recognize pedestrians and, let's say, raccoons and moose crossing the streets. But when they got a kangaroo, the system failed because the kangaroo was hopping and the system was expecting things to crawl or to walk. Okay, so conclusion. We have a nice search engine that you can download from our website, lily.yale.edu, which has pretty much anything that you want in AI, natural language processing. So just if you Google my name, you get to this. This is my lab, and the first thing on that page is the search engine. And this is my last slide. So it looks like that AI is really important these days. In fact, it's a very good career choice. In fact, it's so popular that in France, researchers in artificial intelligence get their faces posted on billboards. So that's the end. Thank you very much. You need to turn on your mic.
Okay, thank you very much, Drago. That was fantastic. Thank you. We learned a lot in 20 minutes.
Yeah, sure.
Okay, so this is our last panel, as I mentioned. So what I would like to do in this panel is to think a little bit more how fintech has been shaping and changing our society, especially the way we think and interact with finance. And also how fintech has been affecting sort of our society's life. And so far, we've talked a little bit about that, but we've mostly sort of touched on how it's affected banks, mutual funds, et cetera. And what I would like to think a little bit more about is how it actually affected sort of real people, small investors, people who are trying to get loans, people who are providing loans, et cetera. So what I want to do is first I would like to introduce my three panelists, and then I will start with questions. So I will just go in order. To the left of me is Patrick Wood. He's the head of academic research at Kensho Technologies. Kensho is the leading provider of data analytics to sophisticated financial institutions and banks, among others, and also critical government agencies. And in addition to serving the firm's commercial and national security clients, Patrick is also responsible for Kensho's sort of connections with universities. And prior to his time in Washington, Patrick was actually a professor at Boston University. And so to the left of Patrick is Alex Acree. He's the managing director and general counsel at Fenway Summer Ventures. Immediately prior to joining the company, Alex was an attorney at Gibson, Dunn & Crutcher, where he advised financial institutions on a wide range of legal and regulatory matters. And before then, Alex held a series of senior positions at early-stage companies. And to the left of Alex is Rob. I want to make sure I pronounced this correct earlier. Let's see if I can do that again. Havert.
Yes, yes.
Rob is a founder and managing partner at Motive Partners. He has held several senior leading positions in the world's largest financial technology firms. He actually founded a company called CIMAT Consultants at the age of 24, which became the backbone of European clearing and settlements, which he then later sold to IBM. He then founded another tech company, which he then later sold to FIS, the largest provider of transaction processing services to financial institutions in the world. So this is the panel, and what I would like to do is, I would like to connect this a little bit to what Drago talked about, or one of the many things that Drago talked about, and actually something that Maggie Perrin brought up in her panel. So Drago talked to you about natural language processing, and one of the examples he showed is what's also called word2vec, which is if you take, for example, king and say minus man plus woman, it comes out to be queen. Well, how do those vector processing methods work? They have to learn from text. And where does text come from? That is sort of produced by us as society. So maybe a much less glamorous example of the same method is if you actually take doctor, you say minus man plus woman, and what comes out is nurse. So as you can see, as some people say with these processing methods, garbage in, garbage out, whatever we input as society is what's going to come out. And as Maggie Perrin mentioned, if you have these kind of machine learning algorithms, you could end up with a system where you have a zip code that has a high default rate, and it could be that that zip code has a predominant number of African Americans or other ethnic groups, and your machine will just exclude it, not because your machine is racist, it's just it does statistical analysis. And so what I would like to do in the panel is try to think about it, but also try to see if we could potentially, and it's a very big issue to tackle, but if we could start at least thinking about some solutions, and also what we should do as society or businesses, is that something we should be even thinking about? So I don't know if you, maybe, Rob, do you want to start maybe talking to businesses?
No, I mean, I don't think I have an answer to that. I do want to So this is the last panel, and this is the end of Friday night. What is it, 5:15? So I wonder what you would expect of a panel like this. And when you see the title, I wondered, is it good or bad, fintech? But for me, more importantly, I think the time has never been more exciting with the available technology we have, the access to capital, and basically, fundamentally, the tools to reinvent how we deal with financial services. And as a result, it can be bad and good, and I'm sure regulators will step in and people will do what they have to do to prevent stuff like that, and there will be very smart people doing what they have to do, what they do well. I think the big message for me to everybody here who is sort of either a student or somebody who's been in the business for a very long time is the time has never been so exciting to be part of this. And for different reasons. First of all, democratization, I think Paul talked about it. I think that's ultimately the answer. So the fact that innovation comes into institutions or outside, I think innovation will come from the individual and the ability of his or her to work together. So from an entrepreneurial perspective, financial technology is heaven. And if I'm a student sitting in this room, I say to myself, should I jump on this, and how ready is artificial intelligence? I think that's actually not that relevant in the conversation. For me, it's more about the oyster opportunity and the ability to create transparent environments where an individual, either a person, has access to choice and can actually be an entrepreneur in this space is fascinating. And I don't want to change your subject, but that's just my...
No, it's a very good point, but I think also part of the question is, I do think it's a very exciting time for people who are sort of on the inside. But there are a lot of people who are not, and part of it, what could be happening is we're actually dividing our society into kind of making some groups more marginalized.
I mean, I'll jump on that. I mean, I think that I just want to echo Rob's point that I think we're, really in one of the most exciting and important times in financial services, certainly probably in my entire career that, I'll see going forward as well. But I think, the answer is both, right? That financial technology provides us with tremendous opportunities to reach better conclusions, more accurate types of analysis, to expand the box and offer consumers and small businesses and others, much more inclusive financial products. But it also raises tremendous risks that you're pointing out. I mean, one example is, when you apply machine learning models to large data sets, it's not always clear why the machine, so to speak, has made the conclusion that it has. And we have certain policy goals in the United States that say, for example, if you're going to make a negative credit decision, for example, you actually need to tell a consumer, why are you rejecting them for credit, right? So that they can actually take that back and try to work and improve it. And on the one hand, perhaps we're getting greater accuracy through new machine learning models, but we're also losing something in terms of clarity and being able to explain things to consumers. And you probably could talk a little bit more to that.
I think that's exactly right. And I think one of the things that this sort of brings out for me is that both the enthusiasm is justified, and it's also somewhat overblown in certain respects as well. So I completely agree that it's the most exciting time. The technologies are accelerating in a way that are making things possible that were not possible before. They're making them possible at a scale, speed, cost that were never possible before. It's a convergence of all these technologies. And yet at the same time, I do think that there are a couple of things that are sort of, in a good way, slowing us down, and in important ways slowing us down. So partly, for instance, the regulatory environment around particular new technologies is important. The decisions that need to get made about self-driving cars, the technology to have a self-driving car that can manage on its own will be ready before the law is ready. We will not sort that out in time, I don't think. And the same thing goes for many of these things where if you let the machine do its work, the issue is that the machine does exactly what it is designed to do, and then when it comes back with something that we're not quite ready for, we don't know what to do with it, and we need a common sense way of dealing with that. And that's why I do think that ultimately it's extraordinarily exciting, because the power that is available to the individual is much, much greater, but those individuals will still need to be in the process, because otherwise those decisions will be kind of, I guess, misaligned.
But didn't you, so when you asked your question about will people be left behind, I think with what's going to come their way, the democratization of all this will allow people to be more inclusive. And we talk about the social, we have a role to play, everybody, corporations, governments, individuals. And I'm very optimistic that the entrepreneurs of today and tomorrow, and also the governments, will know that they have to play a role in that. And if anything is better positioned now than before, is that just its access and availability. It is not a big issue to give somebody a $10 phone, or to say to somebody, let's spend $20 billion on giving stuff to certain people to make stuff happen. I think, I don't know, Professor Economides, I don't know if you followed his book Abundance, when he talks about this whole thing where he can basically now, with the technology, try to rally a group to get stuff done and solve things. So attack poverty, attack certain things, illiteracy, attack the unbanked, and so on. We've never been able to do that before. And I'm sure there are barriers, but I mean, if your question is this a good thing? Absolutely, 100%. And it will solve these technical things, in my opinion.
I was wondering also, I completely agree, eventually it will most likely be solved, but sort of to get there, is it something that we should kind of leave up to companies to do, or should the government step in? I understand this is a very sort of broad question, and big question, but I was just curious to hear your opinions on it.
I mean, I think the answer is, that it really is going to be through collaboration and through dialogue. And I think we're at the early stages of dialogue between the private sector and the public sector about new technologies and how to balance the risks and benefits from new technologies. I think we are still in a place where, on the whole, and there are some exceptions for sure, but on the whole, speaking from the bank regulatory side, I think there is still this perception that using new technology presents significant risks to regulated financial institutions. I think we will get to a place, probably pretty quick, and quicker than we expect, where not experimenting with new technologies will be deemed to be a greater risk than experimenting with new technologies. But I think we're still at the early phases of that.
Yeah, but let's not kid ourselves. Regulators, and there are very, very smart ones out there today already, they're talking about this. I mean, we were on a panel with Mark Carney from the Bank of England. He believes that this is, for him, a breakthrough for potential transparency and so on. So instead of sort of saying, okay, the regulators won't allow it, it will take time, I think we're going to see the opposite effect. These are all individual peoples also at the regulators who want, what do they want? They don't want a 2008 again. They want transparency. They want certain casino things no longer to happen. What better than to embrace new technologies that create that transparency? I know it's very conceptual, but on a Friday evening, just last panel, I want to lift it up because I'm a bit confused.
No, and I don't want to sort of be the downer of the panel here. It's to me, the concern is a little bit more, not as much, and I do want to talk about sort of cybersecurity type questions in a little bit, but more about people who are, so it's not just about transparency, but for example, robo-advising. As a finance professional, I should probably manage my own portfolio, but I use Betterment. And that's great, I'm getting very low fees and things like that, but I'm sort of in the know. If you don't have a checking account, if you don't invest in securities, that is not going to help you. And so the divide between me and somebody who doesn't, is not financially sophisticated, is sort of growing over time. And I'm not sure whether it will solve itself.
Well, I mean, one thing I would say about that is I think we're, I think that as other panels have pointed out, I mean, financial technology is not new, obviously, but we are at this point where, there's so many like really talented and gifted people that are, spending time and, on new kinds of financial innovations, probably more than ever before. And so, I like to say that we are at this moment of sort of a grand experiment. And a lot of the experiments that are taking place are actually on the distribution side, using better kinds of user experience, experimenting with new distribution channels to actually get out. And this is to your point, Rob, too, I think, to get out and actually reach those underserved customers. And so what's going to work? Is in-person going to work? Are there new ways to, use new kinds of social media that are touching underserved populations? So I'm actually more bullish, I think, on this, because the reality is that there are people both with good hearts that are trying to solve these problems, but it's also a massive economic market. And so when you have both of those things aligned, you get a lot of talent allocated there.
Yeah, and there also, I mean, let's if you talk what you just said. I mean, in the know and out of the know. What if we would say that in a better world, you own your own data. And again, you have a standard that is being created through government or through whatever, and that standard has a level of trust that you give to people which can give you offerings. Suddenly you're at the center of commerce or whatever, and all the techniques we talked about today allow you potentially to start doing that. You have a whole different world. Everything changes because we're still all in this product silos in banks. Will incumbents win? Will outsiders win? I think there's a couple of tipping points that will need to happen, which are good for society also, but more fundamentally, which create a world where the individual is at the center. And it's not just about transparency, but you could say that digital identity could be somebody very poor who has very basic skills, and there's a sort of a government or a body that makes sure that there is transparency there, and as a result, that person can get access to simple things they'd never had before. We know who he or she is. Okay, it's a hacker's paradise, it could be whatever, it could be fake, but in reality, that sort of kind of initiatives, I think, are very, very promising. And I think some of the things you say could go wrong are just techniques underlying that. So I would focus on that. Same thing as like an entrepreneur in financial technology. It's interesting how somebody said it, the time is longer, but the impact is underestimated, and it's going to be the same here. Somebody say, Rob, keep on dreaming. Digital identity will never happen, and by the way, the banks will never allow. APIs are standardized now in Europe, so every bank has to decouple all that data, show it up to you. Imagine if what you think you can do with that.
Well,
so that's why.
I would add also that I think that promise for the future is a huge one, but even on a smaller timescale and a more immediate timescale, something like Betterment, robo-advisors in general, on the one hand, yes, it is solving a problem that people who need financial advisors have, which is the fee structures. So on one level, it's great because people who have financial advisors now can do the same thing with lower fees. But at the same time, as you reduce that fee threshold, you are also allowing new entrants into the advising market. So you will have people who couldn't previously afford financial advisors who can now make better long-term financial decisions who otherwise wouldn't have access. So I think the appropriate comparison is partly, not just people who are in the know and people who are not in the know, but actually who is now being included in that group of people in the know that wasn't included before. And so if you look back 10 years, that's actually going to be a very, very large number of people, which is the promise of scaling technologies, transparency, all of these other things, and the kind of knock-on effects that those have.
And there are threats. I think the threats, we talked about big financial institutions. A lot of these institutions live off inefficiencies, and they will continue to live off inefficiencies very well. Somebody talked about the actual profession of a banker. I think we'll have to go back to that, because a machine won't solve certain things, but it will certainly create a more effective environment where we could solve some big social things which we thought we couldn't. And that's less to do with financial technology, but more to do with technology as such.
Could you elaborate a little bit more on how the profession of the banker would come in? I'm just curious.
A banker, somebody talked about it, the banker is very good at understanding risk. One of the things, if you look at some of these P2P stuff, that's often where it really went wrong. I think the banker doing everything from distribution to manufacturing and everything. If you look at a bank today, the majority of it, I think Maggie said it, the majority of their time and effort is put in operations and in technology. We could have a big debate if it's the right thing, and where would I want to work? Would I want to work as an engineer in a financial institution, or do we believe that we're more going to a more sort of world where that innovation will come from outside? We don't have the answer, but I don't necessarily believe that these bankers have to have these massive amount of people and infrastructure, and that they'll have to choose. I think they'll have to get close to their clients, and finally their clients are going to have something to say about it, because honestly they have not had in the past. It was sort of like my dad was with that bank, and that's a solid bank, and so on. So that will evolve, and it will come maybe from other incumbents. One of the cool things people ask me, will startups win or incumbents? I think the incumbents that adapt will potentially win, but the ones who don't adapt will not. So as a result, I think we'll have to go back to the core profession of banking, which is, what is core professional banking? It's taking risk. What else is it?
Taking risk, deposits, I guess, getting...
It's funny when you talk to people about it, some people forget it's not processing transactions. Paul said it very well. And that I think will not be translated into, but the minutiae of the rest of the 70-80% of the bank is spent, I think is really under threat. And that's where a blockchain does come in. And we can have a long debate, will blockchain But if you come to think about it, so this distributed, so that is sort of, I would say frictionless is exaggerated, but that's a massive opportunity for entrepreneurs. And I don't know what the key message should be to students who you're finishing up the course here, but I would encourage you all to come up with an idea in financial technology. The capital's there, the people are listening. For the first time, financial institutions return your calls. Why? Because they're worried that innovation, once it pops up, it's too late.
Yeah.
So, oh, you're there, so and then it's already huge. And so this whole concept of being a student that comes into the world of, I think financial technology is, and entrepreneurship go hand in hand.
That's very interesting, thank you. So to shift a little bit, but also build on something that we talked about, so especially, Rob, you mentioned in Europe now there's more transparency in terms of data. Actually, in England, banks have to give you the data that they own about you and make it available for you to use as you like. And so one question that I would like to talk about is how individuals think about data, or how we should think about data as society. In particular, what will the capabilities of data processing, et cetera, that will come up in the future are even something we can't potentially imagine right now. So as an example, the government actually, I found out a couple months ago, put up all Enron's emails as open database to the public to look at in 2002. And partially now you look at it and there's so much information and potentially very private information we can extract from it. So you might be thinking, why would they do it? Back in 2002, they probably didn't imagine the processing capacity and the advances in natural language processing that we will have in the future. And the same now, when you give people their data, and there are some companies that will offer you money or rewards to use your data, how are people supposed to make decisions about that, given that often they don't even know what people can do with their data, or none of us really know what's going to happen in 5 or 10 years and what that data will be used for?
I would say, and I would jump in with the shortest answer, which is that I think a lot of it is to do with how people value and perceive their own data currently. And I think that we've made jokes about it throughout the day about millennials and their attitudes towards data, and attitudes toward the pricing of apps as another thing. But I think that is something that I think the fundamental assumption is that we give away our data. We've all done it. And I think actually in some ways the real shift will be if it's already too late, what can we do about it? And most likely I think what will happen is that when we start to realize that exactly how much of our data is already out there, it will get to the point where I think my view is that we're already at that place. People just are not as aware of it as they might be. And in fact, most likely when they become aware of it, it's like, well, the cat's out of the bag now. There's not much we can do. Facebook already knows everything about me as it is. And there are countless stories I've heard from friends and acquaintances of the ways in which their data has kind of come back either to haunt them or to provide them with something that they really needed. And I think eventually we may need to put structures in place that will help us deal with that. But I think in terms of how people will react, my feeling is that it's very much as it is today. We've already given it all away, and I think it's all out there already.
Yeah, I think that's right. And I mean, GDPR is obviously a very complex topic and a long topic and a long piece of regulation. But I think if you distill it down, where they're targeting the regulation is not so much on the data availability, because it's largely, at least vis-a-vis consumers, it's already kind of out there. But it's really about use and what can you do with it and needing to obtain consent. And so I think there's been an effort, to the extent that there will be structures to control how data, is propagated in the new digital economy. It's going to be, really focusing on those kinds of choke points and experimenting with what are the right choke points there. Do consumers care and want to manage consent for data? This is going to be an interesting time. 2018, I think, when it goes live, will be interesting to see how companies actually do it. Do they actually comply with it? And how do consumers interact with their companies? And I think there's a lot of interesting experiments going on with how best to do that in a frictionless way. Because one thing we believe when we look at investments is that consumers are not likely to spend large portions of their free time managing their data profiles. There's a small a small group that will, but most consumers will not. Similarly, they don't spend large times creating, manual budgets and whatnot. It needs to be as close to frictionless and integrated into their, experiences as possible.
I think the regulators have a role to play here, because these mega companies who own all this data, and they do stuff with it, and they sell it, and they package it, and all that. So if that's an element of it, I think the government or the regulators have a key role to play. Are they equipped today? Do they think enough about it? Is it harmonized globally? Because of course, probably not, but I think they have a very big role to play there. But it's going to be very national, as you said. It's the cat's out of the bag. Yeah? Let's not kid ourselves.
I'm just picturing picturing a situation where, in fact, let's suppose in an extreme version of this, there is a regulation that requires our consent on every line item of data that there is about us that is being used.
I don't think it's
Facebook.
so stupid.
It's just, we'd
That's
be
probably-
all year.
Why not?
So, and of course, how many of us that have, we buy a piece of software, we sign up for something online, and there is a thing that says you either agree or you don't agree. How many of us, A, have read through the entire thing, B, have taken it to a lawyer to look over? I mean, there's that level of kind of attentiveness to that aspect, and all of that consent is buried in there.
And just we've talked a lot about consumers and their consent rights over data. I think there's also corporate use of data, and what do corporations and companies do with their own data? I mean, they're increasingly realizing that data is an asset that can be monetized or bartered for and exchanged. And I think we're really interested in models where companies have more control and transparency and auditability about how their own data sets are being used. We think that there could be big productivity gains by kind of unleashing data that's currently siloed, because companies either don't know how to share it, don't want to share it with the bureaus for fairly obvious reasons, and don't know how to monetize it.
No, that's definitely true. And actually, The Economist recently pointed out that data is a huge asset, but it's also becoming a liability, as we saw with Equifax. So much. To make it a little bit more concrete, so let's say, we actually talked about this over lunch. Let's say your mom called you and said, or your friend, that a firm is offering me to sell to them, my last 5 years of my tax returns, or some very personal data. So from what I'm hearing, how much should I charge them? Should it be nothing? Like, what would you kind of, if somebody concretely wanted to buy your data, would you just say, look, it's already online, just go find it?
I mean, I think it's hard to answer that in a vacuum. I mean, so much of the data that we give up is in the context of everyday use of products that we don't actually think about the monetary value of. We're thinking about the utility of the product, and I think that's where the big data, it's not, I don't know if it's leakage or whether it's giving away or freely giving away, but that's what's going on, is that everything we interact with on the web is using our data, and we're allowing that by their terms of service. And
the question comes because you would be worried about what? That you don't think you should be able to sell your own data, or where does the question come from?
No, I think I do think we should own our own data. The question is, how do we think about whether we should give it away for free, whether we should be selling our data? But also, one thing I think that complicates that process of thought is I'm not exactly sure what companies or what we will be able to do with my data in 5 or 10 years. And so I was just wondering how you guys kind of think about that potential risk.
The cat's out of the bag. It's a tough one, and also I think if you own your data, you should be able to sell it to somebody. And depending what you need at that point in time, they're going to offer you $500, and you need the $500 to do something. Then I would say buy it, sell it. I don't think you can impactfully see what that means in so many years out. I mean, I think there's a privacy thing, but that is something, I don't know, something that's already, the cat is also out of the bag. So I don't think we have a good answer for that.
Well, there's also, and I think one of the things to bear in mind is that a lot of this data, it's a very interesting, somewhat uneven exchange. So something that when we want to use a particular service, we sign up for these terms of service, what we're giving up is something that we don't perceive any real value in. And the company that is requesting this in exchange for offering us the thing that we do see value in is obviously getting a huge amount of value out of the data that they receive. And I feel like it's a little bit like that, even with the example of the last 5 years of my tax returns. I would not give that away. I probably wouldn't even sell it, actually, because I don't think it's valuable except in the aggregate. So that's where I think actually a lot of this value comes from. And it's one of the things that I think makes this tension between owning one's own data and this idea that it's already out of the bag. It sort of creates this tension, which is that yes, the data is all out there, but it's kind of only out there if you know how to analyze it, and it's only valuable if you know how to put it in context. It's only really functional if you're a company that depends on that data in a very specific way. So it's not like I could go to Google as a single person and say, I'm going to tell you everything about myself, and they would find that valuable. It's only in the context of all of the other millions and millions of users that it means anything.
Yeah, absolutely, yes. But at the same time, if I would know that for many people, that exact information accurately be an amazing business model, which we don't have today. So our plumbing, our infrastructure today, our financial technology has been there for 30, 40 years, or even, it doesn't exist there. And that, I think, that there's the opportunity. So call it again a tipping point where you say, okay, if we can collectively, with government, with the new, with some of the existing financial institutions, build new pipes or build or refresh the infrastructure, that is underpinning those kind of things, you're looking at a whole different world. That makes Minority Report look like old. So no, but this is, I do believe there's a combination of small steps, like creating more efficiency, taking systemic things out of them because of technology. And then there's that end stage, which I think that's why I'm optimistic, not because I'm an optimist by nature, but because I do believe that financial technology, take financial services, and actually, ultimately, I think you turn it on its head, because financial services, you don't need financial services. What you need is you want to live a full life, and you want to ultimately, you have events in your life, you're a different person. And wouldn't it be amazing if there'd be an infrastructure that would be able to recognize that and offer you, and you have a transparent view of saying, okay, I know where those mortgages are, because people don't even, I didn't even know I wanted a mortgage, but I know I just started a family, so by definition, they have my data, there's APIs into different communities, I can know which houses pop up, I can immediately see who's willing to finance me at which point in time in a real-time environment. That is the endless possibilities of all these techniques that were presented the last couple of months, I believe. And that is, I think, the power of financial technology.
I think Rob's point is a really important one, which is that financial service, the next generation of financial services is going to be, you don't even know you're getting financial services. It's just integrated into the experience. We don't usually think, gosh, I'd really love to take out a loan today. Like, you don't like that process, right? Even if it's made easier, it's still not what you're searching for. What you want is money on terms that you'd find acceptable, right? You need the money now. And I think that's the experience. That's the, going into a taxi and not having to pay, right? There's a payment transaction going on, and you're not even really paying much attention to it. And so I think that's really the future.
The risk of all this is we've been so bad at predicting the future. Remember in the 60s, if you see these shows about what's going to happen in the future, a lot of them didn't come through. So this could happen, could also not happen. This is interesting because I don't know if you saw some of the stats. A couple of years ago, you go to a big forum with top-notch financial institution executives, and they were scared. Jamie Dimon, smart guy now who just killed Bitcoin overnight, said that in the same meeting we're going to be eaten alive. Had a big conference call with his buddies. If we don't fix this fintech thing, we're going to. 2 years later, he said, you know what? I saw the stats, all these fintech companies that started, actually not that threatening. They don't seem to get scale, or they seem to get liquidity in some of these markets, so we're fine. I think that is not, I think Jamie Dimon is a very smart guy, don't get me wrong, he'll figure it out. But the concept of potentially this not happening could certainly happen. I saw it in 99, 2000, where tremendous guys had tremendous ideas, the valuation went out of whack, there was too much money thrown in, and ultimately, everything come to a halt. Now, I saw Jeff Bezos on stage in 2000 or 99. I thought he was a hero. After the crash, they thought this guy's gonna, it's like Webvan, he's gonna just disappear. And here he is where he is. So I think those things are we can't predict. But if we have any evidence of history and any understanding of what the potential is, then it will be what he just said. And that is just a whole different world.
So sorry, just to make sure, are you worried that what he just said won't happen? Or
It could take longer. The government or whatever, so many things could happen. The access to capital could stop. Some of the big boys could get bigger. I still think we should look into some of these mega financial institutions and how we can create. I think Europe's doing a better job than the US, in my opinion, on saying, okay, guys, we're not, and that's not just for financial services, also for technologies, these big mega technology companies. I think we should keep them all honest because, to your point, they're very powerful. And in an ideal world, it's not just the fact that your events happen in your life, but also that it's going to be a lower barrier to become an entrepreneur and to be successful. And that is something we have to play a role in also ourselves, I think.
that is a very interesting idea to think that I think we concentrate too much, I agree with you, on if it happens, when it happens, what's going to happen, what are going to be the side effects, and people don't think about the possibility that it might just not happen.
And the second thing is, how do you make steps today with the vision end state in mind, but you still take small steps? I mean, I work for a private equity environment, and they don't care about what happens in 10 years. They want to know that we can buy something, make it better, and then sell it later. And as a result, it's all about EBITDA and cash flow and so on. Now, somebody with a great idea doesn't necessarily have cash flow day one. So I think everybody in the ecosystem, to use a word that everybody used here, plays a key role. And that, if that all comes together, it will happen. Otherwise, it will take much longer than we think, yeah.
Well, I think also part of that experience will come from a number of other factors. We sort of think, we think very much in terms of products, or we think very much in terms of the experience of buying a house, or of that kind of process that needs to be improved, and that's a very valuable way of thinking about these things. But there's also the kind of underlying business. So if you picture the sort of two parallel businesses, one is facing considerable margin pressures. There's a good deal of reason for them to start to find more efficiencies because of the margin pressures that they face. And anywhere where there's a large margin, there's a lot of inertia because there's very little reason to change what you're doing. And it's, you know, if it ain't broke, don't fix it. So there's a certain sense in which you can't really predict the direction in which things will go, but you can sort of get a little bit of a sense of what that's going to look like by examining some of these, where the pressures are in terms of margins and in the markets, and you can start to see where some of those things might happen.
But what I also, and I also think is everybody's a little, it's okay for, and it was the same in 1999, 2000, everybody can think of ideas, and not everybody, a lot of people are listened to. I think that can have a mega effect. So nobody cared. I heard Maggie talking about the ecosystem and taking people to Silicon Valley and employ. Now, actually, every person in doing something wakes up in the morning, and if you read something saying, am I doing this right? Is this efficient? Can I come up with something new? And that connection of ideas, I think, we haven't seen anything yet of the impact of that. So everybody thinking, okay, what am I doing? Should I be doing that? Can I do it differently? And then the democratization of ability to go do a prototype. Or how difficult was it in the old days to get something going? People make a great app over the weekend.
Yeah.
And it could be very impactful. And I think it's a threat for a lot of all these guys like Oracle, all these guys who have these mega systems and they pay a fortune. Some kid, and I know it's iconic, but some kid in the garage is going to be able to really challenge them over time. I truly believe that. And that has more to do with the readiness of the model versus now with the technology that's available versus it was 10 or 15 or 20. And it's going to, if there's some of these laws that say each time it doubles, I think if that's the case, watch out what's happening in 10 or 20 years from now.
No, I agree. That will definitely be very interesting to see. I think now we should take some questions from the audience to make sure the audience hasn't fallen asleep at 5:30 in the afternoon.
Grueling, 5:45 on a Friday night.
I know. So, are there any? I think there's a question.
Thank you. So I work here in New Haven. I do research with low-income people, including a subset of that, it's people with mental illness. And while I've been kind of encouraged by what you all have said about that fintech will serve these marginalized communities, frankly, I don't see it yet. I certainly have kind of endless new apps that I can download and make the best of my money, but I don't see the equivalent happening for the people I work with. I mean, they're certainly served by financial services industry with products they need, but those products are pretty expensive and don't really help them in the same way that ones help me. So my question is, if those fintech products are out there, I'd love to know about them and understand why they're not reaching the people I work with. And if they're not there, what needs to happen to make sure that the pace of development of products that serve me doesn't race so far ahead of the pace of development of products that help those people?
I think you've hit the nail on the head. I think, I'd be happy to talk to you afterwards about examples. I mean, we certainly see it a lot. We are not expressly or specifically an impact investor, but we do really look for technologies that are going to have a positive effect on the stakeholders, that aren't extractive. And there are a lot of people who care about innovation to serve the underserved communities, both here in the United States and across the world, whether it's through digital identity, lowering the cost of credit, increased access to programs, whether government or private sector. There's really actually a ton of innovation going on in this space. Now, you may not see it yet, and I think that really, it harkens to one of the things Marina said. It is a challenge to reach sometimes to reach these, populations, and I think that's what folks are trying to crack.
And again, here, I think Bill Gates said it so well at the World Economic Forum last year when he was talking out at the debate. He says, if I focus on something and if I put a lot of money to work and I set a very ambitious goal, like I'm going to take this out, I'm going to take polio out, that's what he said, I think he succeeded with his, or almost succeeded. I think we need similar programs in that space because it's relatively new. The technology is available. It's not that expensive to, the problem is a bit our system. We talk about it, we like to talk a lot, but ultimately it's all about, can I take you public? What's my next valuation round? Can I calculate my options? So I think there is a part of the system that is probably not interested at all in your story and it gives you lip service. But there are some amazing people, and there are lots of them, of course, our inner selves that would sort of think, okay, let's focus on that. So awareness campaigns. And I think we at Motive, not that I want to make a big promotion here, but we felt that as a team, we wanted to do in a small way what a Gates did and say, okay, we're going to do certain programs. Now, there are some amazing programs going on. I don't know if you follow in India, the microfinancing and all that kind of stuff. Fascinating. We're very poor people where people do this app and this microfinancing. I think we need to do more in this country, absolutely. And we need to start awareness campaigns, and we need to put our money where our mouth is, absolutely.
And I would give you one example. On the payday loan space. The most positive rationale for payday loans is that either you have people who are coming that are in need of cash or in need of credit, and you don't know enough to underwrite them, to risk score them, right? And I think it's the advent of the lower costs of computing with access to new kinds of data, to mobile phones and things like that, and many other innovations that are allowing us not for the first time, but are allowing us without seeking a subsidy or providing a subsidy to actually get the kind of returns that investors are demanding while also serving those populations. And we're at the early days of that, but I think we will crack it. Not for everyone, but we will start to chip away at that problem.
So I've actually been waiting to ask this question all day for the right panel, so you guys clearly fit that bill. So I know that the revenue opportunities and the algorithms and all this stuff is extremely exciting. However, I, as like a certified financial planner, operates as a fiduciary and also coming from a very blue-collar background, am quite concerned about fintech's impact on the average consumer. And I think doesn't come as a surprise to anyone that we have a very large financial illiteracy problem in our society. And so I'm wondering, to what extent do you think that financial technology is kind of kicking that down the road, perpetuating that issue, making it much more, making it easier for consumers to turn a blind eye or take blind faith in these financial technology companies, that they must be doing what's in their best interest, rather than kind of holding a healthy dose of skepticism. And if that is an issue, does it fall on the shoulders of these financial technology companies to then educate the consumers about what they're doing and why they're doing is in their best interest? If not on the fintech companies themselves, then where in our society does that education need to come in? Because I would assume at some point, technology can only go so far. If you don't have an educated consumer base, they're not going to understand what that technology will do for them. So I want to talk about financial literacy and illiteracy as it pertains to fintech.
I'll jump in.
Oh, no,
I think that financial literacy is a difficult problem. We've looked at a lot of folks who are trying to tackle that problem. I think that and maybe someone will do it this way in a way that works, but taking a consumer, sitting them down and saying you should spend 5 or 6 hours, understand your own personal income statement and balance sheet is just not going to work. or it hasn't worked, and I don't think it will work. I think that the things that seem to be working more, and I can give you some examples too, but is including the education, making the transaction itself a teachable moment, right? So integrating the literacy component into the thing that the consumer is driving for, and I think that is both been quite successful and been quite useful to financial institutions who are incorporating that into what they do. Because there's quite a bit of learning you can do about consumers when you start engaging with them through the transaction process, rather than just having them proceed from A to Z. You don't want to ruin your funnel metrics, so to speak, by adding a whole bunch of other stuff, but you do actually learn a lot by engaging with consumers. I think we'll see more of that. There's a lot of risk splitting you can do by engaging with consumers, and hopefully you can take folks who would otherwise maybe not be eligible, but qualify them because of interactions with them during the process. But I think that's the thing that's been working. Maybe games, I don't know, it's tough.
It's not different from somebody calling you with your phone and trying to convince you to buy something, and we are not having this debate about if the phone companies sort of created a bad or good, and they did actually, because they created a medium to be reached every night and try to sell you something. So I think there's always a flip side to it. I think the government, again, the regulation is important, and plus you have to act. There is some protection I think the consumer should have, certainly if he's illiterate, and then there is a teaching moment. Those two come. I don't think there's a magic bullet for that, but.
I do think also that one of the things that we do see increasingly is I think the most important thing is actually just setting up the expectation that this kind of knowledge is valuable. And if you look at other, I was, as you guys were speaking, I was trying to think of other contexts where a consumer or a sort of purchaser of any item who doesn't really know much about the context for that particular thing is still able to make an informed decision. And one of those things is just Amazon. There are people who make what turn out to be quite complex statistical calculations on the basis of how many reviews a thing has of what quality. So everybody knows that if you've got 4 reviews at 5 stars, that's not as good as 1,000 reviews at 4 and at 4.8 stars. And that's a very, very simple statistical metric that people use on a daily basis. But they have to care about what those reviews mean. And I think that to me is the principal bridge that needs to be crossed. And that's where I think the kind of teachable moment that's the sort of ripe opportunity for that, is to really kind of prioritize the value of asking that question. And then once you have that, then I think the idea of communicating what might be somewhat complex financial information is actually less of a challenge.
One sort of somewhat academic thing I wonder about is, if you have a financial application that, it might be very empowering to someone by giving them more clarity as to their cash flows. It's really hard to kind of predict your cash flows. Machines tend to be pretty good at that, actually, if they have enough data. Humans, not so much, right? And so if you have something like that, or other kinds of tools, that gives you, it's on the one hand, it empowers people, but on the other hand, does it create dependency, right? It's not unlike a calculator, right? It's great to have a calculator. Net, better to have calculators than not. But if you forget how to do multiplication by hand, like that's also, there's something that's lost.
Hi, thank you very much for today, by the way. It's been enlightening. I'm a Yale World Fellow, and I'm also a Young Global Leader at the World Economic Forum. And during my time at Yale, which has been spectacular, it's just a semester, so I'm blinking and it's almost over. I've been trying to come up with a bigger picture. I'm in the humanitarian space now, but I was a Wall Street financier for 20 years, left that, and now I'm a social entrepreneur. During my time at Yale, I'm trying to come up with solutions for the big humanitarian problems that we face today. The refugee crisis is the biggest crisis we have. You mentioned digital IDs, so I'm a part at the WEF with the Digital ID Group, and President Obama has started a big coalition that I'm still a part of. It's left the White House clearly, but now it's moved on elsewhere. Thank God it still exists. It's doing good things. I'm wondering, with all of the people we've had today, I didn't hear anyone talk about besides you mentioning briefly the digital ID, there are incredible opportunities as well as doing good at the same time regarding the humanitarian crisis that we face today. Again, the largest being the refugee crisis, 60 million and counting. Cashless, a World Food Program and MasterCard give cashless cards to refugees to access food in certain camps in Jordan. But still, like there's so much that can be done with technology, and I'm doing that with a for-profit that I've just built, training refugees on cybersecurity, data analytics, and AI machine learning, launching in Brussels, then launching in New York. But there's so much that can be done within the space. I'm curious if anyone, not only on the panel, but those who spoke earlier, are doing things in the humanitarian space besides digital IDs and cashless cards that we can discuss. I'm curious, and I encourage everyone, by the way, to do more. Would be great. Thank you.
Well, I know that my company, so Kensho Technology, is one of the kind of early and continuing products is a data analytics platform that performs calculations that are actually, they're very difficult to quantify in certain respects. So a lot of it is event-based, which is unstructured data. And generally, in the past, the kind of query that our platform answers have been done kind of on a quick back-of-the-envelope sort of calculation, and it's very hit or miss. And we've brought a little bit more precision to those kinds of questions. So it's not exactly in the humanitarian space, but one of the areas with a very, very similar challenge is the idea of offsetting your carbon footprint, where for a year's worth of activity, how do you calculate the amount of carbon that you need to offset if you wanted to make a contribution? So we actually did build an app. It's called CarboTax. That is built on the idea of paying effectively a tax for your carbon consumption. And so that is a similar way. We've employed the same kind of fundamental ideas, much of the same underlying machine learning to the idea, but it's more in the environmental space than in the humanitarian space. But I think many companies, what they're doing in terms of the sort of surface technology may differ. And then what they're building in the background can certainly be applied in all of these other respects, the basic, the algorithms that allow them to do the work that they do and to provide the products that they do can be applied in these other contexts much more easily. So I think there's a lot that could be done, certainly.
I think we could do so much more, so I would just invite you to come and talk to us. Come and see us, and let's brainstorm about it, because I think it's absolutely horrifying to hear these stories, and we're not doing enough. It's not enough on our radar screen. So open invitation and motive, Steve, to have a brainstorming on that.
Okay, well, given that we're the last panel, we probably should not run too much over time. And it sounds like I'd like to finish up by basically there's still a lot of opportunities and a lot of things for all of us to think about and to work on. So thank you very much.